Devang Mehta also joins us on the show right now. Devang, what to do with the markets right now is just red on the screen and red across portfolios.
I think, yes, clearly there is a lot of red on the screen, as you rightly said. But one thing that remains very not philosophical is that you can only focus on your control levels, right? So the market behavior is right now not under our control as such. And we know there are a host of factors which are bringing in not only volatility, but also uncertainty, which is quite unnerving for the participants as well. And what is adding fuel to that is, of course, the Fed meeting, which is scheduled for this week. The upcoming budget, which normally very famously people talk about that it will just be a non-event, but honestly, this time around, there is a lot of expectations that is riding. Otherwise, a lot of good work that has been done by the government to sort of give capex a boost will be undone. So I think a lot of things are required. One, on the capex front, a good budget of 11.5, 12 lakh crore, and the road ahead for the capex, which was not done this year. Also, consumption needs a little bit of boost. So I think, yes, people are going with a lot of expectations also into the budget. There has been a sharp correction to the tune of 14-15% on the markets, and mid and small caps have corrected big time. But honestly, for somebody who is looking beyond 1.5, 2 years, this is honestly an opportunity in adversity. That is what I can right now say about the markets.
The take coming in as far as the market setup is concerned. But Naresh, any pockets of strength, if at all? I understand you're saying that one shouldn't trade right now, but select name from real estate, the likes of Sobha, DLF are showing signs. Macrotech is up, albeit 0.5%, but still. And then FMCG has been bouncing back because people are looking for perhaps defensives right now. So Britannia is one of your top gainers. HUL is doing well. Is it time now to look at some of these names?
So in terms of relative strength, where we've seen is something like a Bharti Airtel Telecom, which has not fallen. So Indus Towers also has not corrected. It's been holding on to the recent lows. So that is one pocket. FMCG, for the fact that they've corrected 20-25%, and post numbers also did not see a sharp correction on the downside. So they could be making a base out here. So these are two places where there is a base formation. IT was trying to hold on, but after today's move, which could happen in NASDAQ, that could also take a hit. So for now, telecom is a space which is there. Then there is large cap banking, which has taken a pause, which is where you look at a Kotak and an HDFC Bank, but they've been on a pause for the last 4-5 years as such.
Right, okay. Well, FMCG seems to be that one hiding place. Other than that, of course, ICICI Bank is holding out. M&M is finally seeing some buying. But Naresh, is it looking like conclusive? Because M&M too did fall in the last 10 days.
If you look at it, has been a relative outperformer all through the last few years. Now, in the near term, also corrected from 3250 down to 2750, 2800. Now, till the time it holds above those levels of 2700, 2750, which has been the low for the last 6-8 months, that would imply the stock is forming a consolidation and not taking a breakdown like other names. But overall, if you look at the whole auto pack, some names which corrected have not seen follow-up selection in the last few days, whether it is a Hero MotoCorp or Bajaj Auto or even Eicher Motors or Maruti, which is holding on. So auto seems like a space where either it's consolidating or stocks that have fallen a lot are making a base for a bounce back.
Right, okay, that's the take coming in on M&M right now. But Devang, hi afternoon. What else is looking like it's finally corrected enough to get into value zone? Anything that's looking interesting for a buy right now?
Actually, yes, I think the fall has been across the board. It is time to hide into defensives. I think the correction has been so large as such, because in the last 4 years, we have not seen correction to more than 5-7%. And this time, the stocks have also corrected 10, 15, 20, 25, 30, 40%, some of those. Ideally, yes, I think it's not a higher time to hide in defensives. Rather than that, probably just phase out your investments over the next 1 month, because you will have the end of the earnings season. You'll probably also see the budget as well as what Mr. Trump does in US. I think, yes, there has to be a list of at least sectors and themes first. So if I can mention certain themes, engineering still looks very interesting. I know it's a huge ambit of job that engineering covers, the industries that it covers, but a lot of manufacturing, engineering, power automation type of businesses, capital goods, which were not correcting, which has seen a one-side rally of say 20, 30, 40, 50, 80, 100. Some of these businesses have become even 3x, 5x over the last 4-5 years. Semiconductor related businesses, there are warehousing related as well as data center related businesses, which are proxy plays. So a lot of these companies, yes, in the mid cap and the small cap domain, where there can be still an exaggerated fall of the next 5-7%. But ideally, these are businesses. I think I'm not a fan of people saying that the industries would change, the sectors would change. I think probably if India's GDP is going to grow fast, these are themes which have to come back with a bang. So ideally, yes, you have got price correction, you got valuation correction. Most importantly, are the businesses still doing well? You have to listen to the commentary of the managements over the next couple of quarters, but these are the businesses or the themes which we would strongly suggest.
Let's get in some BTST trades as well going on that note. Naresh, what's on your list?
So that would be a sell on Varun Beverages that's broken down over 6-8 month range. We expect a follow-up sell towards 500, 510 levels, stop loss at 535. Would be a risk reward buy on Indigo with would keep a stop loss, a revised stop loss closer to 4130 and expect a bounce back towards 4250.
Kunal, what about your BTST ideas?
So I'll go with the buy on HUL. That's a chart which is looking attractive. At least looks like that the stock seems to have formed a base, and that major selling could now be over. 2450 as a target. Stop us at 2340. And the second would be a buy, more of a contra buy on L&T Finance. That's a stock which is on the verge of forming a bullish hammer formation. The stock is completing a breakout, potentially above its 50-day moving average. So if it closes above its 141 mark, traders could look at a buy with 146 as a target. Stop us at 136.
Okay, so that's the view coming in. L&T Finance as well as HUL. Still some of the buy recommendations coming in from our technical experts. But having said that, a lot of red on the screen, right from our Aditya Birla Sun Life AMC to IDFC First Bank to Nuvama Wealth Management Services, Piramal Enterprises, Loris Labs, CTSL. They're all down and out in the trading session. What's holding up in the green is Adani Wilmar. That just came out with its earnings, so a bit of a bump up there. Federal Bank is holding up okay, and then Sumitomo Chemicals too is looking on the positive side. ICICI Bank has managed to inch up 1.5%. But Naresh, if you're looking for safe bets within the banking index, is ICICI Bank still the go-to name?
With Kotak Bank one and then HDFC Bank, purely for the fact that they've not been outperformers. ICICI Bank has been an outperformer in the last few years. And both these names have gone sideways for the last 4-5 years. And giving first indications of a trend change, multiple attempts around 1800 for HDFC Bank, 1900 for Kotak Bank. So if I have to hide somewhere in the banking space, this would be two large liquid names.
Okay, that's the take coming in on some of the banking names. Bank of India, though, is the one which is actually scaling the charts, much unlike some of the other mid and small caps today. Bank of India higher by 6.5%. Even Federal Bank has jumped up about 2%. And Yes Bank as well is seeing some move up, about 1.6% higher as we speak right now. Torrent Pharma too reacting to its numbers, going home with gains of about almost 3%, and LTF, like Kunal just highlighted, that also is looking strong. Other than that, of course, within the large caps, it continues to be an ICICI Bank, M&M kind of day. Britannia Unilever too holding out in the green. And then SBI, which is holding up by about almost 0.5%. It's flat for Axis, marginally soft for Kotak. That's pretty much the picture when it comes to some of the banking pack. But IT, that's continuing to bleed. You've got a Bharti, TCS, Titan, HDFC Life, DRL. They're all a pack of losers as we speak right now. And even Tata Motors, which is now at 713 on the futures, that's seeing a very sharp 3% cut ahead of its numbers later this week. Kunal, just a quick take on Nifty IT, because, it's completely reversed the trend from last week.
Yeah, it's reversed the trend, and now this looks like more of a potential breakdown for the IT index. Yes, the confirmation is still yet to happen if the IT index breaks below 41,700 mark, but that could be just about 0.5%, 0.7% away from the current price for the Nifty IT index. And when we look at this over the last 1 month, there were two major bounce backs for the IT index, but then in the entirety over the last 1.5 odd month, the pattern has been lower highs and lower lows. So we would now probably wait for that confirmation of a break below 41,700 for the IT index. If that happens, we could be looking at least another 700 to 1,200 point correction on the IT stocks.
Okay, point taken. IT might just come under pressure, a bit of a reversal as far as the trend is concerned. But Devang, what about some of those beaten down segments? Chemicals, for instance, didn't do much for a long time. Cement didn't do much for a long time. These are the pockets to watch out for now, or still stay away?
I think, yes, you made a relevant point that agrochemicals and specialty chemicals, all this have stayed out for a long while. And there was this news about destocking as well as, I think, after a cycle of I can say good times. They went through difficult times for the last couple of years. I think during COVID times they did extremely well. There is a glimpse of recovery when we talk to the managements. I think most of the pain seem to be behind us now. Just as I think Sumitomo Chemicals just came out with numbers that has been one of our portfolio stock, and I think we'll just deep dive into the numbers. But having said that, I think on the face of it looks like good set of numbers. So mostly, I think this part of the industry which had suffered due to cyclicality, I think the next 2-3 years, this seems to be a good value which has emerged also for agrochemical as well as specialty chemical. And if there is something that into the agri side of the economy, as rural consumption also needs a boost, I think this again another sector which will sort of gain. So this is one sector which probably should be on the radar of people.
To have you then on the show, Naresh Kanal, we'll let you go on that note as well.